Hey folks, Dan Frio here with your closing bell for October 1st, 2024. So we saw mortgage rates ease a little bit. Is this because of the Fed or anything else? No, it's because of all the other stuff going on. We got a hurricane. We have Israel getting bombed and bombing. We have the port closures on the East Coast that's basically shutting down all imports and exports from the East Coast. Really going to affect cars, automobiles, and clothing. That's the biggest piece of that. But it's also predicted if it lasts too long, might push us into a recession, push up inflation once again, because remember the supply chains that were locked down over COVID? Well, this is a big piece of that just basically got steamrolling ahead, and now they're closing down, or they've closed down. So we're going to monitor this and how it goes. But I thought the markets would react a little bit different to all this data that's coming in. So my gist of the video was going to be, when's the best time of year to buy that first house? And you start seeing a lot of those, yellow leaves. And when you scroll down to here, what month is it? Actually, they broke it down to the day. So Yahoo Finance said the best time to buy your first house is between October 1st and the 7th. Okay, that's how precise they're getting. So I'm going to let you know you have just 6 more days to get that house under contract. So just getting you there. But it does come down and say that March of 2023, October of 2023 was the best month, and usually March or October is the best month to look, because you don't have as much foot traffic and competition out there, but you don't have as much homes on the market. But in today's environments, that's a little bit different. You have supply that's starting to really, really ratchet up. And then so if you're looking to buy homes now, you might be in the catbird seat where you're out there, you're looking, and you don't have all that competition with the other people. So economic news, we have the bond markets, we have mortgage rates coming down, as we noticed right through here. What's actually making that take effect? Well, let's go over to Rick Santelli and get the state of the market right now. And he's going to actually coordinate his information with the economic calendar to show you guys exactly what's going on with the economic news that was out this morning. That we missed some of this, and so I like giving it to Rick so he can go a little more detailed for you guys and explain exactly how the markets are reacting. So, Rick, take it away for me, buddy.
Economic data just crossing the tape. Let's get straight to Rick Santelli in Chicago. Hi, Rick.
Hi, thank you. Sarah, we're looking at construction spending. It was estimated to be reversing last month's drop, but that's not to be. Down 1/10, and that follows a negative revision for last month from down 0.3% to down 0.5%, which means last month remains the weakest level since Feb of 21, and this doesn't improve it very much. JOLTS, job openings and labor turnover, expected to be a bit under 7.7 million, comes in better, over 8 million, 8,040,000, and that follows a slightly revised 7,711,000. That number ends up being the best since May, when it was 8,223,000. So an improvement there on the jobs front. Now we have 4 different categories for the ISM PMIs on the manufacturing headline for September: 47.2, and that follows 47.2. Now the 6th consecutive read under 50, which is contraction. If we look at prices paid, this is a component we want to be moving lower. We're expecting 53.5, a huge drop. This is key. 48.3. That is the weakest level of the year, and that takes us back to the end of last year when it was 45.2. New orders have had 5 negative reads under 50 in a row. Does this make it 6? It certainly does. 46.1, and it's odd.
We don't have that number.
46.1 actually is better than our last look, so we see the deterioration remains. Last month's 44.6 was the weakest since May of 23. And finally, ISM employment. Important week for an employment index because, of course, tomorrow's ADP, followed by Friday's big jobs report. 43.9, a huge drop. 43.9, 43.4 in July, and there's where it matches up. Yes, yields are holding at 370 level, which is down 8. The curve continues to flatten. At one point, we were looking at 20 basis points. Now that's down to 12. Carl, Sarah, back to you.
So that's it. But again, the reason why I was so concerned is this is all the stuff we have going on. So if you had a hurricane going on, wars all over the world, then you had, the port strike there's a lot of bad news out there. Usually with bad news, you see the equity markets come quite a bit down and you see the bond market rallies. So let's get to see what the equity markets are doing right now. Dow Jones down 100. Okay, I'll take that. S&P down 45, NASDAQ down 253. So yeah, the markets are reacting finally at the closing bell, but this has been kind of hit or miss all day long. Just recently, the Dow Jones was only off just maybe 20 points or so. I thought these markets would just get hammered on all the, especially with the war in Israel over in that area. So that's what I thought was going to be a bigger issue than that. The VIX is moving up. It's not nearly the 60 points that we saw during that a couple months ago when we had a big spike in that section. You do have oil spiking based on all this news, and you have Bitcoin or cryptocurrencies also coming off their highs with this data. So that's what we have so far for the equity markets right now. In the bond market, we'll go back to that data. Right now, we have the MBSs at +9. So mortgage rates are going to be basically sticky right through here for today. What news do we have coming out tomorrow? Well, let's check and see on Wednesday. We have the ADP payroll numbers coming out. That'll be first thing in the morning. They're anticipating a nice little increase in the jobs market. We hope that the jobs market doesn't fall flat on its face, because that's what the economy needs at this point, is just a strong jobs market, and we will be on to that soft landing. So that's what predicted right now. So if you're out there looking to buy that first house, October 1st through the 7th is the best time to do that. How do you get pre-approved, or how do you get approved to buy that first house? Well, visit my YouTube channel or my website, therateupdate.com. My name is Dan Frio. I'm a licensed mortgage loan officer throughout the entire country, as well as Puerto Rico. So if you're anywhere in the country, I'd love to help you. If you'd like to work with me, then you will. So the first thing I want you to do before you check and see if you're available for any grant finders, please tag our website. It's therateupdate.com. That's our website. You're going to go here and you're going to find a whole bunch of information up here. Okay, there's resource tabs up through here. We have financial calculators. I would suggest using the financial calculators that we have down below in the description. I think they're a little bit better than our website's one. We have the loan estimate tab. So if you've locked in your rate and you got 30 days or more till you're closing, check and see if we can get you a better deal out there. Okay, then the grant finder. If you're out there looking for that first house, you got to check and see if there's any grants out there available to you, and this tool will do just that for you. Then otherwise, the last thing is, if you want to get the ball rolling, can you buy that first house? Can you buy that first investment property? Is it prudent to refinance at this time? Those are all questions that we can help you answer by hitting the Apply Now button, or just give us a call. You're going to scroll down to the bottom right through here, and that's all our information. So you can give us a call directly at 844-775-5626, or you can email me directly, and yes, it will be me answering that and responding back, and it is Dan@therateupdate.com. So thanks so much for watching, guys. I greatly appreciate it. God bless. Have a fantastic evening, and please be safe. That's all I ask of you. Take care, folks. I'll see you tomorrow. Bye-bye.